You are listening to chartingwealth.com for Tuesday, the 10th of April, 2018. As I was finishing up my final edits on Charting Wealth, the book, over the weekend, I really emphasized at the very end of the book how important it is for all of you to use the daily market worksheet every day, except, of course, over the weekend where you use the weekly market worksheet. And every time you do a practice trade, to use the trade worksheet. All of those are available for free at the website. We have links to all of the daily emails that we send out to all of our subscribers. You can subscribe at the website for free to the daily market reviews. Please print those out and spend the 10 minutes you listen to this broadcast every day filling out your daily market worksheet, or over the weekend, the comprehensive review and forecast, that weekly market worksheet. And every time we give you a weekly vertical crossover and a potential trade, do the practice trade and use the trade worksheet. We have videos also available at the website, at our YouTube channel, that show you how to use the daily, the weekly, and the trade worksheets, how to actually fill them out. I know there's some questions there, and we explain it. But I can't tell you, if you want to supercharge your training, that is the way you do it. That which is measured, okay, improves exponentially. So it measured and recorded improves exponentially. That's Pearson's law. And that is why we record things. We don't just make notes and verbally say things and think about stuff. We write it down. There is a magic all its own in learning, and it will hyper accelerate your ability to read these charts and to become charting and market masters, because market mastery is what we are all about. Otherwise, I just hope you enjoy my entertaining voice. I know you want to do this, so please use those worksheets. They're free. It only takes the same 10 minutes that you listen to this podcast, this broadcast, you watch it, that you fill out those sheets. Now let's jump in and move through these charts. It's real easy to tell you what happened in the markets today. Everything was up. Stocks up, gold up, bonds up. Now let's jump into the S&P 500. We see the week started off on the weekly chart with a green up candle. That's just the first day of the latest 5-day candle, but it is significant in that it's pushing through the 3-week trend line that we had going down. Derivative oscillator is continuing to lose downward momentum. It peaked all the way back on the week ending the 2nd of March. While things were sliding sideways, we then had 2 weeks of up movement and then 3 weeks ending last Friday of down movement. Now, we don't know what this week portends. It's just started off with some up movement. The derivative oscillator is losing downward momentum. Price percent oscillator, still headed down. Now, it's our master oscillator, and it is headed down, which again is a good sign, the best sign. Now, what do we see on the 2-day chart? It's sort of going sideways on the price percent oscillator. Derivative oscillator losing downward momentum, just like the weekly. And again, we see a sideways slide underway going into about the 5th day of that. So far, we have a doji. Again, this 2-day candle will complete at the close of business on Tuesday. So keep your eye on that. Remember, the weekly and the 2-day still in confirmed down moves. That's important. Why? Because our 4-hour chart is flat, heading down a little bit. It looks like it's sort of heading toward the red signal line. Been sliding sideways throughout the course of the day on Monday. If it really starts to barrel down tomorrow on Tuesday, you might find a good jumping in point. In fact, the 2-hour in the afternoon did tweak over going down. Now, that's just the 2-hour. Doesn't mean the 4-hour is going to do that. Sometimes it leads the way, sometimes it doesn't. But the derivative oscillator is losing upward momentum. Price percent oscillator is flat, down a little bit. So if it crosses over, get ready to jump in. That means check the market at noon on Tuesday. See if you have a jumping in point. You can do a practice trade on a down move on the S&P 500. What does that mean for the typical person? How can you make money when the S&P is going down? Well, you could purchase something like SH, which is it's a short. It is a short fund, which means that it moves in the opposite direction. As we enter that in, it is the pro-share short of the S&P 500. So, in fact, when the S&P goes down, SH goes up. just one way. You can also buy puts when something goes down. But again, just something to watch. If you were in the S&P 500, of course, it would mean that if it starts going down strongly, you don't want to be in. But if it starts to go up, you of course want to be in the S&P 500 in SH if the S&P 500 is going down. So keep your eye on the prize. Be a little sophisticated about this stuff. Learn and practice. Let's go into the Qs. What's going on there? QQQ, that's the Nasdaq 100. Up a little stronger for the day, pushing on that weekly trend line, gaining downward momentum, however, on the derivative oscillator, and the price percent oscillator is headed down. So again, first day of a weekly candle doesn't make the week, of course. As we look at the 2-day chart, what do we see? It's not as flat as we saw in the S&P 500, still headed down on the price percent oscillator. Derivative oscillator, however, is losing downward momentum, and we see, again, a sideways slide, having pierced all the way back on the 4th, the 2-day candle on the 4th of April, the 2-day trend line, but still below the weekly. And as we look at the 4-hour, what do we see? Well, it's flat also. And again, keep an eye on the prize. If you see it rotate over, crossover going down, might be an opportunity for you to jump into a down move. Again, 2 hours not crossed over going down yet on the Qs either. So keep your eye on things on that 4-hour chart. See what it looks like at noon on Tuesday. What's going on TLT? Up 0.17% for the day. Remember, we had a weekly vertical crossover going up on bonds back on the week ending the 29th of March. And we had a prior up week over the course of the last week ending the 6th of April. And so far this week, a red spinning open box top. Looks like price movements move below, just pierce the weekly trend line. However, the derivative oscillators gaining upward momentum. Price percent oscillators headed up on that weekly chart. We look at the 2-day. What do we see? It's still heading up. And we see so far the first day of the latest 2-day, a green spinning top means indecision. Price movement is above the weekly, but below the latest 2-day trend line that we've been able to draw. Derivative oscillator is losing upward momentum. And what does the 4-hour chart show us? Well, it is where you see the loss of that momentum, where things peaked out last on the afternoon of Monday the 2nd, sort of headed down over the course of the prior week up until Thursday afternoon, popped up on Friday, and then popped up a little bit on Monday. So look for a potential crossover going up. Again, check out the 4-hour chart around noon on Tuesday. See if you have a jumping in point. The 2-day has already crossed over going up. Actually started that back on Friday, then down a little bit on Friday afternoon and actually Monday morning, and then peaked up later in the day on Monday. So again, watch that 4-hour chart. See if it gives you a jumping in point around noon or maybe later in the day on Tuesday. Okay, back to the weekly chart. Gold up 0.34% for the day. Remember, gold is still in a confirmed down move after you had a weekly vertical crossover all the way back on the 16th of March. Then it went up for 2 weeks and sideways going into sort of the second week. Derivative oscillator still in the negative. Price percent oscillator still in the negative on gold. It just won't cross over going up on that weekly chart. The 2-day did cross over all the way back on the 23rd and then sort of fizzled out very quickly by the 2-day candle on the 27th and has really been sliding sideways and tending down with the derivative oscillator losing momentum. And now we see the price percent oscillator sort of laminated on that red signal line. That tells you absolutely nothing. So we'll just have to sort of see what's happening with the derivative oscillator. And it, of course, is losing momentum. We see that the latest candlestick, the first day of the latest 2-day, is a green up candle. But again, it hasn't even penetrated where things moved down on the prior 2-day candle. So keep your eye on gold. There's really not much of a trade at this point unless the 2-day rotates over going down. We look at the 4-hour chart. What do we see? It's actually trying to penetrate going up. So keep your eye on things. We'll see what happens with gold. There's nothing for us to do at this point since we have the 2-day moving in one direction, the weekly in another. But if you see that 2-day pull over and start heading down, then you might pay attention and see if there's a potential down move in gold. Nothing right now. Folks, that's where we are as we end the day on Monday, go into Tuesday the 10th. We appreciate all of your questions, problems, concerns. Let us hear from you. Feel free to write us cw@chartingwealth.com. Visit us on YouTube, Instagram, Facebook, and of course, if you're not a subscriber, subscribe, because that is where those are the people that get all of our latest training and all the goodies first. And you do that at chartingwealth.com. God bless from the whole team here at Charting Wealth World Headquarters.